Hi everyone, this is Rob Roy of Elliott Options, and welcome to this week's TradeFinder Live. A lot to talk about, so I won't spend too much time on the preview, but if you're new to TradeFinder, welcome. Basically what we do is we go through and talk about the markets, and then we look for trading ideas, and with whatever time's left at the end, we open it up to a live Q&A, and we can talk about whatever it is you want to talk about. So with that, I'm going to go ahead and get started. So let's take a look at what happened with the market. Welcome to everyone that's live streaming on the various platforms, social media platforms out there. With kind of joking about this, but with the YouTube videos that we've been putting up, I know some of you have made mention of it, but there's so many of those bots that are out there now. And it's such a big deal with Elon Musk's acquisition of Twitter, wanting to get rid of the bots. And I had no idea until we started getting more views on our YouTube videos, how many of them there are out there. So maybe Elon will, if he doesn't buy Twitter, he'll consider buying YouTube from Google, whatever. But anyway, so let's take a look at the market. Some earnings reports moving the markets over the last couple of trading days, but we still look like we're kind of trying to base here right after touching that 380 level, which was the official level for a bear market. And so we touched it, bounced off of it, and we want to put the moving averages on here. If you're bullish, you're thinking, okay, we're basing here, and we're probably getting ready to try to make this wave 4 to the upside. We talked about this in the SPY update over the weekend, that there was two scenarios, option A, option B. And so option A, and you guys really participated in that, so I appreciate it. Option A was bounce up to the upside, create our wave 4, then go down. Actually, I don't remember which one I said was A and B, but there's two options. One was we bounce up, create the wave 4, then we go down and make the new wave 5. Now, the way this algorithm works is that wave 5 tap box, time and price projection, that price is likely to going to be hit. But we don't always know if that price is going to be hit in the wave 5 or if the wave 3 extends to that level before creating the wave 4 and then a subsequently new low wave 5. So the potential exists for this wave 3 to continue down into this area right here, then we bounce. And you might think, well, that's a lot of selling before we get a bit of a bounce. But the thing that makes that interesting is that drops that wave 4 projection back down underneath the 420 level. So again, two schools of thought here. We bounce right back up to a major point of resistance at 420, makes sense. Or if we bounce now, we break above 420, which that would be kind of like everybody saying, okay, it's all clear. We've broken back above that 420 was support for a while. Now it's resistance. We've broken back above it. All good. No harm, no foul. We're ready to go off to new highs, which people are saying. If you read the comments on the SPY videos, there's still people thinking that we're ready to run now and make new highs. Personally, I don't see that right now with the Federal Reserve just now embarking on a rate hike campaign and withdrawing liquidity. I don't see a run to new highs in the near term. Down the road, of course, but in the near term, I think the market's going to struggle. So my only question in my mind is, do we break 420 on the wave 4, or do we create a wave 4 below 420 right underneath that level of support resistance? That's the two choices in my opinion. And the way the market is set up here, really ugly day for Snap. If you saw that, we're going to talk about that a little bit later on in our case study consideration for tonight, because it's just been absolutely shellacked. So we'll give that a look as far as a case study consideration for the week. But really interesting here that we are trying to base in this area, and perhaps we base from here, and then we can jump up and create this wave 4 here, and then we turn and make the new run to the wave 5 low. But it's going to be one of those two scenarios. So either down here to this wave 5 area now, bounce up and we make a lower low because all those things will shift down, or we bounce first and that wave 5 is going to be the low. and then we start working from there, perhaps after a couple more Fed rate hikes and maybe some more inflation data that shows that the Federal Reserve is finally getting a little bit of a handle on it. Those are the things it's going to take for the market to turn and move back to the upside. That's just how it is. That's what's going to be. All right, so let's go ahead and take a look at the TNX. So we want to see what bonds are doing. And we'll look at the dollar. So there was a lot of chatter on the financial networks today. Guys, see that move down in yields? So a lot of commentary on yields are moving down, yields are moving down. And the thought process is that, well, that should be positive for the equities market, right? The fact that yields are moving down. So we're breaking below 3%, the lowest we've been for going all the way back to the beginning of April on yields after that last little push to the upside we made. So why isn't the market rallying? Why are we struggling in the market? It's because the reason yields are going down, as prices go up, yields and rates go down, money is moving out of the equities market and into the bond market. That's what's pushing yields and rates down. So that's not a positive for the equities market when money is leaving there. We need yields and rates to come down on their own, and we need yields and rates to come down because the economy is looking better. That's not happening. The economy is not looking better. Inflationary data is high. The expectation is the Federal Reserve may actually bring that 75 basis point rate hike back in their next meeting conversation. None of those things are conducive to rates coming down. For rates to come down on their own, organically, if you will, it would take the fact that the inflationary data is better. And there's less of a chance of the Federal Reserve being as hawkish, being as strong on raising rates. That's what would organically bring rates down. But what's bringing rates down now, again, is money coming out of the equities market and into the bond market. So two completely different scenarios there. And, you know, it is nice that rates have come down. That could ease on some businesses, but it's the reason that it's coming down, which is not as good as it could be. So let's take a look at the dollar real quick. And the dollar needed to calm down a little bit for metals. We talked about that over the weekend. And you can see this move down. And you know that if you've been watching any of these videos, that I've been very strong the dollar. I'm King Dollar fan. I want a strong US dollar, but I don't want it to get out of control. I don't want it to get to the point where it really stifles international growth. But I want the dollar to stay strong into the point where it's still viewed as the currency of last resort. With the amount of debt that we have, that was really concerning to me back here. If you remember, that was a conversation that we had when we had this triangle here, that if we were to break down below that 96 level, and there was talk of countries getting together and perhaps the dollar could lose its status as the currency of last resort. And I was worried about breaking below 96. None of that happened. Everything moved to the upside. That's great. Now we're creating the wave 4, which we needed to do. And we talked about that in the last update, that the wave 4 projection was in. Well, now we've passed the first fib level of 23.6%. So we're at a 26% fib level on the wave 4. Is that going to be the end of it? Maybe, because we're awful close to the 50-day moving average. So the dollar could find support right here and move back to the upside. Now, what's interesting about that is when Elliott would look at a 23 point, the first fib level, before he really wanted a 38.2% corrective move for it to be viewed as a true correction. He just wasn't as much in favor of the 23% level. He wanted that 38. He wanted it all the way down to 38.2%. So his viewpoint was, if we didn't make it to there, is it really a legitimate pullback, or is it just a little blip in an extended impulse move? Well, when you look at it, it kind of looks like a correction, right? Even though it's just kind of at that first 23.6% fib level. But that was Elliott's viewpoint in reading all of his works and all of his commentary, etc. And in normal terms, I'm kind of along the lines. I have that same view because I've seen a lot of corrections that look like they were, and then you resume the previous impulse move. This one is labeled a 4. It looks like a wave 4 correction to me. So you take every case on its own merit, and that's the way I view things with Elliott wave, etc. As everything is viewed on its own merit. And you can see that we have this move down to the 50% level. Now the question becomes, does the dollar hold here? And whether it does or not, that's okay. I'm fine if the dollar wants to pull back a little bit more. I'm fine. Like the dollar really gives a shit or cares what I think. And that's if, as long as we stay above 96, I'm okay. I feel like that's where we want the dollar to be, and giving a little bit of relief there on the dollar is helping international companies and metals. So let's see what metals did today with that move down in the dollar. And that's what you would expect. We talked about this again in the SP, and I'm talking about this a lot tonight. But if you haven't visited our YouTube channel yet, do so and take a look at all those SPY updates that we do. We do them every week. I'll do one a version tonight as well. And so the metals, to catch a bid, needed the dollar to weaken. And we've been chatting about that for the past couple of weeks. And so now that the dollar is taking a little bit of a breather, it is putting a bid under the metals. And we're in SIL for our alert subscribers. And we may look to do GLD now that it's starting to move off of that level of 170. And if we put the moving averages on, you can see that we're clear of that 10-day moving average. We bumped the 30-day. So if you're new and you're not used to these moving averages on the screen, the lime green line is the 10-day moving average, the fuchsia colored line is the 30, and the blue line is the 50-day moving average. So we tapped the 30-day on the high. The reason that I have the 30-day on there is a lot of market makers look at the 1030, and I've got a lot of friends that are ex-market makers, and in order to get real information, you have to talk to previous market makers. You can't talk to current ones because they don't really tell you what's really going on. You have to talk to the ones that are retired, they're not in anymore. Then they'll kind of give you little hints and tips and stuff of what goes on the floor. But a lot of smart people, educated people, if you will, like to look at the 1030 cross for ideas of a near-term trend. So we haven't had that 1030 cross yet, but the 10-day moving average is curling up. And if it does cross above the 30-day moving average, that would be suggestive that the bid lasts longer in metals. So that's something to watch moving forward. And so since we're looking at the GLD, let's go ahead and look at SLV. Lots to talk about, so I'm kind of talking rather fast here, but I do want to get through a lot of the different markets and see if we can't find. I got an idea. I really want to take a look at that snap move today too, and see what y'all think about that. I'm going to actually ask for you to put some opinions in there on whether or not you like that. I'm always the one saying this is our case study consideration for tonight, but I'd like you guys to have some input tonight. So we'll do it as a team. So there is SLV. So there's silver. And you can see that we had consolidated around 20. We're trying to break from that level. And note the separation between the 10 and the 50-day moving average here, back up here to this wave 4, which does make a lot of sense in SLV because there's also an area of major support resistance going right through that where that wave 4 projection is. So it does look like the SLV wants to make a run at least to 21.5, and then we kind of take a move back and see where we go from there. By the way, if you want to ask a question, make sure you put the question in the Q&A, and then towards the end, Zach will come in and he'll help, and we'll go through and answer questions. So if you have a question that you want answered, put it in the Q&A. For those of you that are subscribers and are used to the insiders meeting on Thursday night, we don't do the raise your hand on Tuesday nights. So make sure if you have a question that you put it in the Q&A so that we can get to it there. With that, some movement further to the upside, I think, is in the metals. So that would imply that maybe that 23.6% correction in the dollar is not as far as it goes, or maybe the dollar just consolidates a bit from there. We'll see. But it does look like this little bid that's come into the metals wants to continue, is my point. And it would be very hard if the dollar turns around and starts rocketing back to the upside. It's going to be hard for the metals to turn and go back up with that as well. Let's go back, and we should have done this the first time, so apologize. Going back to the SPY to show you volume. And you can see as we're consolidating here around this level, note the volume today. So we opened, we sold off, we kind of rallied back towards the close and average volume. So that may be enough to give us this oversold bounce that we've been looking for. And that's because of, again, the separation between the 10 and the 50-day moving average. So the only question, as I said before, was how far does the wave 3 go down before the bounce? The bounce is coming. You can just write that down in your book. We are going to get a bounce. This isn't going to go on indefinitely. And that 10-day moving average will get back to the 50-day moving average. So the only question was whether it comes now or does the wave 3 come down here and then we bounce. That's it. That's the only question that exists in the market. One of those two scenarios will play out. And as the market acted today, it does look like the headline of, touching the official bull bear territory could have been enough. And maybe we can bounce from here because it could have been uglier today with Snap, etc. And it wasn't. All right, so let's look at some of the other markets here in the US, and then we'll look at some international ones. So here's the Dow, the diamonds, the DIA, and you can see we're back up towards 320. That doesn't mean anything though. 330 is the level that's key. And again, the wave 4 sitting just above that level. So on that scenario where we break back above support resistance and the markets are like, okay, we broke back above, very strong resistance levels. Everything's okay. It's a scenario that makes sense for what I felt needs to happen. And that boxer puncher mentality that used a couple of weeks ago. In fact, it was 2 weeks ago on TradeFinder. People were talking about that exact same scenario on the financial networks a couple days ago. Are they watching us? I hope so. But it was really interesting that they're talking about, they didn't say puncher boxer, but they said the VIX is beating the market up. So they used our same analogies without using the exact terms that we used. So I thought that was pretty cool, that we had that out there and somebody was talking about it. But again, it's the same scenario that I still believe the VIX has to have that cathartic spike. But the question is being raised now with the VIX just constantly peppering up in that 35 level. Is that enough? Is that enough to put a bottom into the market? And, the market's going to do what the market's going to do. Look at this. So I'm going to bring the chart of the VIX up. I highlighted this in the weekend's SPY update as well and suggested, are we starting to form a triangle here? It kind of looked like we are. And look at that. Look how nice that triangle looks in the VIX. So something is getting ready to happen in the VIX, which means, as you know, something's getting ready to happen in the markets themselves. So if we spike to the upside, the market goes down. If we break to the downside out of the triangle, then the market likely goes up and we get that oversold corrective bounce that we're looking for. But you can see that we've had a couple more sideways days here in addition to what we showed over the weekend, where that symmetrical triangle is more well formed on the VIX. Really, really interesting stuff. So let's go back. I'll go back to the Dow for a moment and just show you that there's that wave 4 right above 330. So very similar there. Now let's look at the Qs. And that's going to be interesting as always. We'll look at the IWM as well. Then we'll get to the international markets. I know a lot of you like looking at the international markets as well. So there's our wave 5. Now it held at 105. It was key that we moved because we were at 100% for a while. If I back this up just a couple days, you can see that the wave 5 extension was right at 100%. And the reason that's key is if the wave 5 extends 100% or less, you look for a retracement back to the previous 4. However, when the wave 5 extends beyond 100%, two things come up. One, you only look for a 61.8% correction of the wave 5 when the bounce does occur. And the second one is how far down does the extension go? Well, obviously, there's another fib level at 38.2, so we could go down to 138% on the wave 5 extension, which would coincide pretty much with the SPY going down. Or do we bounce first? It doesn't have to bounce. I do want to be clear on that, because we have fulfilled what this Elliott wave pattern was supposed to do with a 61.8% wave 4 and 100% extension on the wave 5. That is textbook. Elliott wave has done what it's supposed to do. Now we're trying to figure out, okay, that pattern's complete. what comes next? Do we correct back towards the previous 4, or do we extend on the wave 5? So it'll tell us, and we'll be able to chart it soon. Right now, we're just trying to figure it out, which of the two, and that's the key. There's always this little time frame when an Elliott wave pattern completes and does exactly what it's supposed to do. Often there's a little bit of a time frame in there where you let the next pattern set up, and that's where maybe you just pull back a little bit, which is what we've been doing for our alert subscribers. Is, let's let the pattern play out. We feel like we're going to get a really good shot at this next move lower. Just let the bounce play out. Whether it comes sooner or later, doesn't matter. Hard to chase it to the downside right now, even if we do go a bit lower. Let that bounce play out, and then we have a great high percentage wave 5 coming, which I think is going to be great for downside trades. So right now, let the market do its thing and let it play out and see where things go from here. All right, so let's look at the IWM now. So we'll look at the Russell, and it's held in there pretty well also. And you can see that 170 level that we ran right down to has now formed a support. You know what would be interesting, because we talked about this before. So we had the 210, 230 channel for a good part of 2021. Then we come to 2022 and it looks like it's going to be 190 to 210, right? Well, then we break that level. And so it isn't going to be a repeat of 2021. But now, are we going to start? Are we going to start a new one? Is it going to be 170 to 190? Fascinating stuff in the IWM. But look where that wave 4 is. This is the one that I think is a little more of a stretch to get all the way back up to 200, to get that far above the 190 level. You see that wave 4 is a little higher above the resistance level than it is on the Dow or the S&P. So I don't know if that plays out or not. But isn't it interesting that the Qs have completed a wave 5, but none of the other markets have? So does that mean the Qs extend in the wave 5 while the rest of the markets create their wave 5? Probably. I've talked about how I feel like the Qs are going to underperform. So as the rest of the market, even if we bounce and then creates its wave 5, I think the Qs probably extends its wave 5, even if we have a little bit of a bounce in the meantime. So I don't think that scenario changes, not unless something drastically changes. Inflation comes down considerably out of the blue, so the Federal Reserve all of a sudden becomes more dovish. Instead of, that's the only scenario that brings back the move into the Qs. Let's go back to the VIX for just a moment, because I did want to mention this, and I meant to mention this in the beginning. We have 2 more Black Swans to talk about, don't we? Now, we talked about this at the beginning of the year with war, the Ukraine-Russia conflict, which turned out to happen. And now we've got China. You saw they flew all the planes over Taiwan. Maybe it's just scare tactics. Let's hope that's all it is. But they're not happy with President Biden saying that we were going to stand by Taiwan, and then now they've backed that off and saying that, they respect the one China thing. So whether he misspoke or not, who knows? But China wasn't happy about that, and so they flew a whole bunch of more planes over top of Taiwan. Is it just rhetoric? Are they really seriously thinking about invading Taiwan? Who knows? We all hope not, but I don't think we can rule it out 100%. And now we have monkeypox to worry about, another virus. And it's one thing after another, just constantly showing up as concerns that could affect the markets. Well, monkeypox isn't large enough now to have a significant effect at all, but they're sure playing it up on the media. And it's mainly because, and I've learned more about monkeypox than I ever thought I'd ever know about it, but basically because usually it doesn't spread the way it's spreading. And that's what's confusing people, is how is it spreading? This is unlike how the virus normally spreads. And so there's some concern there. Whether it becomes a big deal or not, who knows? Likely not, but it's certain more talking points that the market has to deal with. All right, so let's take a look at Bitcoin. And I'm still impressed that Bitcoin has held in there where it is. Now, it's not doing anything, but going dead sideways. But the fact that it hasn't broken down below 28,000, that's a line in the sand that some big players apparently are drawing. You know, we had this support resistance at 40. You've talked about the 4 levels, so I'm not going to repeat that. If you're newer, go back and look at some of the other videos. 4,000 is the stepping stone on Bitcoin. Every 4,000 is a support resistance level, every 4,000 move. But we've held this 28,000 level pretty darn well so far, even with what's going on in the markets. And you can see, here's the one that this is what makes sense to me. As far as all of the setups with where the wave 4 bounce could be, look at that one right there at 36,000, which you can see how that was support for so long. And then we broke it. So what was support becomes resistance. So now that's resistance, and it's right smack where that wave 4 is labeled. That makes a lot of sense to me. So I could easily see Bitcoin bouncing up, hitting 36,000, and then rolling over and going down to the new wave 5 as the markets make their wave 5. So to me, that's suggestive of maybe, you know, option A. Again, I don't remember which scenario I gave them in over the weekend. Of the first scenario being we bounce now and then make the new wave 5 low, versus going lower and then bouncing less. So if you look at Bitcoin, which a lot of people do, is a risk on, risk off type of a guide, it's kind of giving us an idea of it's risk on. So maybe we bounce. But I think it's really interesting that Bitcoin, of all the charts, is the one that has that wave 4 projection exactly where support resistance is. So again, that makes a lot of sense to me, especially with the fact that Bitcoin has stubbornly held 28,000 and hasn't wanted to break it. And so the longer that platform builds, the better chance there is of a bounce back to the upside from that level. Okay, let's look at EWA for Australia. We could look at Brazil too, but let's look at, and you can see how it's bouncing back to the upside. We had this kind of a road bar down here. You know, you hear about an island reversal. You don't really hear an island reversal as a single bar, but it's kind of what it looks like. And an island reversal is when you have a gap one direction and then a gap the other direction. But usually there's a few bars that create the island. So it's usually like 3, 4, 5, 6, 7 days, somewhere in that 3 to 7 days of sideways move after a gap in one direction. And then you get the gap the other direction, and those bars are just floating off on their own between two gaps. That's an island reversal. Normally the second gap holds for a while and the market continues that way. Same exact scenario here, other than the fact that you can't really call one bar an island reversal, at least not by the traditional sense of the word, but our term. But here we are sitting right back up at this resistance area here at 24, and we've broken above that. We broke above it and we've held it. So Australia looks like it's ready to go. Like it's like, all right, we're done playing these games. And it did make a higher low, which is important right there. So let's take a look at some of these other indicators. Money flow is kind of non-committal, getting a little bit of short-term assist from the CCI, but we really wanted to see, is the ADX giving this move any, and it's not yet. Even the positive directional indicator hasn't been able to cross the negative yet. So granted, the DMI is a little bit slower. It's a bit more of a lagging indicator. It's not believing in this bounce yet. So I think until we get that ADX to at least tick up and the positive directional indicator to break above the negative, we have to be suspect about whether we're going to hold above 24. But if those two things play out, if the ADX does tick up and the positive directional indicator closes above the negative, then I think 24 can be support again, and we start to run back to the upside. But for right now, you got to just be cautious on that, I think, is the prudent thing to do. So let's take a look at INDA for India, and then we'll look at the DAX as well. Still an awful lot of support being generated right down here on the Indian market. As far as the INDA right there at the 40 level, it's holding really well. So could we bounce? Again, the separation between the 10 and the 50-day moving average. Note when that happens, it does. Here's a good example. See, when you get that separation between the two, See how the 10 runs back to the 50? Separation again, 10 runs back to the 50. That's what I'm talking about as far as it doesn't last forever. You can get that separation, but at some point in time, that 10-day moving average is going to run back to the 50. Is that what's going to occur now? It's starting to look that way, at least in these markets. And then let's look at the DAX, of course. And pretty nice little move back to the 50-day moving average there on the DAX. And it also held the support level. So like the Indian market, it held where it needed to hold, but a little bit better move there. Let's look at the DMI. So we have had a positive cross between the two directional indicators, but really not a tick up in the ADX yet. So just like what I was talking about with Australia, you kind of want to see that ADX give a little bit of a nod to that move upside with some strength there, but at least the positive directional indicator has crossed above the negative. So the buyers for now are outpacing the sellers on the DAX. So pretty interesting stuff there. So I wanted to show you, we didn't close out an alert this week for our alert subscribers, but I did want to show you something that we did do today with MOS, Mosaic. Look at what we've built here as far as a potential bounce to the upside on Mosaic. And it's a little, if you wanted it to be really perfect, we would have preferred that wave 4 to come down to 50. Well, it didn't do that, but look at everything else that's applying here. So we have this. So I'm going to let you guys pick between this and Snap. So that's why I'm showing you this as far as what's our case study consideration for tonight. So there is the triangle, and then we ran to the upside. Classic Elliott wave triangle here. So we broke out, came back and tested the breakout, and ran and fulfilled the breakout move. Well, once that is finished, if you've been listening over the months or years, you know that once a breakout occurs in a triangle, it's eventually going to get retraced. The breakout will get retraced to the triangle. So we did that. So we're back here, and that's exactly where we are right now. And we're kind of forming a bit of a, not the most classic triangle, but a bit of a quasi triangle right here, right at a 50% wave 4 corrective move, and also exactly where the point of the previous triangle was. So we ran up, we retraced it. Now we're consolidating again at a 50% wave 4 correction level with a bit of a triangle. So we want to be careful on that. Elliott would say the likelihood is to break to the upside. I've shared with you that my experience with these triangles has been you got to respect a potential move either direction. So I think we have to be a little careful that we could also break to the downside here. So we watched that. But there's great support there at 50. So even if it were to break to the downside, there's a limit to how far down it can go. So we kind of have a limited downside here with great potential upside with that wave 5 all the way near 95 as far as a potential move higher. So we did send that out as an alert to our subscribers. So if you've ever wondered how the alert subscription works, we send out alerts on entries, any adjustments, and exits. So we hold your hand from beginning to end on a potential trade. Where in TradeFinder, you know, we look for ideas and then you're kind of on your own from there. So that's the difference between, you know, looking for trade considerations, I call them, on TradeFinder versus actual trade alerts that we do on our website for alert subscribers at EWOtrader.com. If you want to go take a look at that and see what that looks like. All right, so let's take a look at some of our previous case study considerations. Obviously, with the market, there's been a lot of movement. So SJM was Smuckers, and that one was back on 419. And look what happened to food. Where did food go? Food was coming back in style. So that's where we were. We were set up here. And if you're wondering about, you know, should we take profits quicker rather than waiting as long, you can see, boom, we moved up 5 points, then we came back down, then we ran up again and made a new high. So that's about 10 points above where we were. Hopefully, if you were following along with this, you took your gains, because if you didn't, look what happened. big, massive move lower. And so like why the food stocks have been holding in there so well. What happened? Now, is that an idea that inflation is going to come down? Because that was kind of one of the things that put a bid under the food stocks is inflation. They had pricing power. They were able to absorb from the producer end and pass it on to consumer. As you know, if you've been to the grocery store, you know you've been paying more for your grocery bill. So they were able to absorb that and pass that on to us. And so they were generating pretty good gains. Is this a preview of what's going to happen if inflation does come down a bit? It makes you wonder as far as what could potentially happen in the rest of the market. Is there a scenario where the market could run to new highs if all this inflation stuff is overblown? It's way too early to tell that. I'm just throwing things out there. That is unusual to see what happened there. But hopefully everybody took their gains before that occurred. And then we had the EWC, and that's the ETF for Canada. And we were looking for a fill of that gap up there at 39. Really surprised to see this 37 level get broken, and more surprised to see 36 get broken. And now we're in between. So now we're teetering between the two. Now, in the meantime, we did come back and fill this first gap. So when we looked at this, we were back here on 426. So it was the following week. So that was right there. And that was the first gap. And we thought maybe we might get both these gaps filled because we were sitting on that support at 37, as you can see. Well, the first gap got filled, but the second one hasn't. And now we're back above 36, trying to get back above 37. If we get back above 37, then maybe we go run and close that. So I think that you kind of keep that one going if you were following this one, and see if the scenario of the bounce first comes. If the scenario is the bounce coming later, then you get out. But maybe give it another day or two and see what happens from here. So then we had Reliance Steel, and that one was from May 3rd. So if we go back and look here on May 3rd, and we look at the Elliott wave pattern, you can see there was potential to move up there to 215, and we've come down to the 50% corrective level. This is the key level here to watch. We need to hold this right here at 180, trying really hard. If it does, then I think we have sufficient momentum to run up and try to make that new wave 5. But it really needs to hold there. If it doesn't, then there is another level of support, as you can see, at 170. But the next level then becomes 150, and I don't think you want to hang in that long. So somewhere in this 170, 180 level would be ideal to see a move higher. But what you would want to see is a break above, a close above 180 with a follow through day in the not too distant future. That would be the key. That would be the ideal scenario there for that to play out. And then WLK was to the downside. Lots of K's. And that one's still working its way down towards the previous 4. So everything looks good there. Keep that one going. Potential target of 110 eventually. And then CI. And see that move there last week, pulled back a bit. Now we're trying to regain it. But look at this nice, this is old school here, but just a plain old fashioned uptrend in the wave 5. And we're at 153% extension. So it looks like it wants to go up and hit the 161.8% extension on the wave 5. So that would be a break above 270. We did close above 270 there on the 17th of May, but we didn't follow through. We pulled back the next day. So if we can break back above that level with a follow through day, then I think we do hit that 161.8% level. And then that's probably an area where you'd want to go ahead and close that out. And then HZO was another one that we looked at and was bouncing back nicely. Now, this was a 50%, or excuse me, an 80% wave 5 extension. So it should go back to the previous 4. But at this point in time, it's testing that wave 5 low. So we're back down here. This is where it needs to hold. If it can't hold here, then you either exit this one or you consider flipping the trade and putting on a bearish trade. And the reason I say that is, look, there's a big gap down before the next level of support, which is all the way down there at 25. So if we come back over here and we're at 37. So if we can't hold 37, we go to 25. So what do you think? Would you want to adjust that to the downside, or would you want to just take the loss and walk away? Either scenario is okay, but I think when you have just such a run like that, where if you break this level of support, there's really no more resistance on the way down till you hit 25, that's 12 points lower. That would be a nice downside trade. So I think that's something that warrants consideration if we don't hold here. If we hold here, then we could still build and turn and make a run back to that previous 4 if the market does go through its bounce scenario here. So what I wanted to do tonight was take a look at, and these were the 2 scenarios that I wanted to give you for case study considerations for tonight, and we'll open it up for questions. One was Mosaic, so you saw that one. Now let's take a look at Snap. So I want you to vote by putting comments in the Q&A. Which one do you prefer? Now you can see, look what happened last time there was a gap down in Snap. Does that happen again? Maybe. I mean, we went down 43% today on Snap. We're nearing 10. And you know there's tons of institutional interest in Snap. They're not letting it go below 10. So I feel like there's a really strong floor there at 10. There's just no way institutions are going to be forced out of Snap. I don't believe that at all. You can look and see that we've had levels of resistance and support at 30. So it was support for a while and then became resistance. And then we moved it down here, and you can call it anywhere you want in here between 25 and 22.5. Just call it a channel there of support / resistance between 22.5 and 25. Well, now we're on our own with this gap down, and 2 things. One, we're starting to get a pretty significant separation between the 10 and the 50. It could get further, granted, but again, look what's happened in the past. When you get the separation, you get the run back. So are we there yet? We could go a little bit lower, it looks like, but we're not too far away from that bounce. But look how far we are on the close from the 10-day moving average. That must have been a massive volume spike, and it was. So when we look at volume, and price to volume always matters. I don't care what technical trading system you're looking at. Even with Elliott Wave, we look at price to volume action. It will always matter, in my opinion. And when you see that kind of selling, when's the last time we saw it? Look, the last time we had that big gap down where we had this massive selling. The reason that becomes important is that's when everyone that wants to sell has sold. Everybody's like, I'm out. I'm done. And so everybody that wants to sell has sold Snap. Who's left? It doesn't matter what the fundamentals become at this point. It doesn't matter what you think of the numbers or where it can go. This is where it comes to plain old buyers and sellers. If there aren't any more sellers, the path of least resistance is back to the upside. It doesn't take a lot of buying power to get you to have a nice run back higher. What if it only runs to here? If it only goes to there, to 22.5, even 20, round it off at 20, we're right now at 1279. That's a big move. And I think one that's very likely to happen when you take everything into account. The stock was already sold. This was everybody thrown in the towel today. Everyone got out. There just aren't any sellers left. even if we have a little drift lower in the morning on a tiny bit of follow through, if you bought it today, you add to it. If not, then you look to buy it in the morning, I think. So those are my two. A little bit different scenario than what we normally do as far as finding a case study consideration here for TradeFinder, but I think two very compelling cases, two completely different charts, completely different circumstances. Which do you pick? I want you guys to decide. So Zach, are you there? Can you hear me?
I can. Can you hear me? Hello?
We have some technical difficulty with support
Testing,
tonight.
testing. Hello, hello.
Says he's talking, but I can't hear him. Why don't you shoot me a text? Shoot me a text. Who's winning? All right, well, we'll just bring it up. Let's just bring it up and see. XOM. Dan's looking ahead for wanting to see what we're going to look at. It's pretty close. All right, so we're just gonna, you guys, you did the politically correct thing. But look at them both. All right, let's see which one wins. There was votes for both, equal numbers. So we're gonna do that. So we're gonna say for tonight, we'll put them both down. We couldn't make a clear decision, so we're going to look at MOS and SNAP. So we'll have both of those as our potential case study considerations for this week. I can't wait to see how these two play out. I think they're both really good ideas. All right, so let's take a look at some symbols that y'all wanted to look at. So XOM was one. So let's look at ExxonMobil. Let's look at USO first. How about we do that, and then we'll come back to, let's look at oil. So there we have that, and we have this as a strangle for our alert subscribers at EWOtrader.com, and you can see this huge ascending triangle, massive. Something's going to happen. Look at that doji. Wow. Something's getting ready to happen. So I wanted to leave open the possibility. We had talked about this in the past, that it's hard to come up with a fundamental reason for oil to go down. Maybe that's enough. Maybe it's just that it's so hard to envision oil coming back down that it does come back down. So I felt like we needed to be in a position to take care of, but something's going to happen. There's going to be a pretty decent move out of oil. Either if it explodes higher, oh my, can you imagine as hard as it is at the gas pump now? You know, if we break higher, yikes. But again, even though it's hard to fathom a scenario where we move lower in oil, maybe that's exactly what happens. Well, that's obviously going to affect ExxonMobil, right? Which is having a really nice run. Now, here's the argument. If you've listened to the financial networks, there's a lot of people that are bullish on ExxonMobil. A lot of the pundits that come on are talking this, and they're saying that even because there's a lot of people that feel that there is a case that oil could go down lower, but they're saying that oil companies make money at $45 a barrel. That's where their cutoff is. If you're ever curious about that, 35 is a trouble area. But if oil's at $45 a barrel or higher, then oil companies are doing really well. And, you know, we're way above that. So when you're talking about $100, a barrel oil, it's going to be good for the big oil companies. And we've only had a 69% wave 5 extension. So could we go higher? Yeah, that could go all the way to 100%. But look at this wave 4. So here was that we didn't make it to 38.2. This is kind of an in-between. Those are the difficult ones for me. When the wave 4, if it only goes to 23.6, okay, great. We're still in an impulse move. And I look for zigzags to figure out where the impulse is going to end. So if we only go to 23.6, look for zigzag pattern. That gives you your target on where that impulse move could end. If you go to 38.2, that's a corrective wave. So all the rules come in for a 5-wave impulse pattern. But when you're in between like this, it's trickier as far as how far can that wave 5 go. So I still think you have to follow the rules. It's far enough away, in my opinion, from 23.6 that you still look towards the potential of that being a 100% extension. And it does look like there's a diagonal going on, etc. So it looks really good for ExxonMobil to at least run to 100. It's hard for me to imagine that we're going to get this far and not at least go to 100. So in my opinion, XOM goes to 100. We'll see what happens from there. All right, let's see some of the other ones that y'all wanted to look at. Yeah, we talked about USD and FCX and TLT. All right, look at those. You guys following the rules too, putting in just 2 symbols. Good job. So TLT is obviously going to be the opposite of TBT. So, you know, one shows rates, one shows prices. So they're just inverse. And so when we look at TLT, you can see that prices have been moving down. So rates have been moving up. Now we're getting a little bit of a bounce here. So this is the key level on TLT. So again, just depending on whether you want to look at the price side or the rate side, you can trade either TLT or TBT. They're both on the 20-year or the 20-year. But this is the key level 120. Since we're looking at TLT, we got a little bit of an ascending triangle here. So right there, pretty nice little ascending triangle. Can we break above 120? If we do, probably going up to 130 there to create that wave 4, but we got to get above 120 first. So that's going to be the key level on TLT. And then FCX, that's another good metal one to look at. That's I like that. Freeport McMoran with the dollar, but it hasn't really caught much of a bid yet, right? It's not following along with GLD or SLV. A little bit of a move higher, but not much. So it's lagging a bit. This is a kind of an easy one. Your stop, if you were to go long here, your stop is at 35. If it breaks below 35, just get out. But you've got potential move up there to 42 or so. So another 5 points from here would be nice in FCX. And I think as long as the dollar doesn't just turn around and run right back to the upside, that's some really significant support there at 35. I think maybe FCX is just lagging GLD and SLV as far as the metal space, and then we could get another run there. I like that one too. So good choice on those two as far as potential moves there. Tilray, man, we haven't looked at Tilray in a while, so let's do that. Ugh. Well, I didn't think that we would get below 5 like that. When we looked at this one before, and I can't remember exactly when it was, but look what's happened. 5 has now become resistance. So let's look at the volume. Did the institutions bail? Well, they did at 10. But there's got to be aggressive. See, there was some here above average volume, but not significant. I used to know the exact time frames on how long a stock could trade below a level before the institutions had to sell. But the aggressive mutual funds, investment companies, where the investment objective is aggressive growth, can own stocks between $5 and $10 a share. If it breaks below 5 for X period of time, they have to sell. And so what tends to happen is then they come in and support it because they'd rather not do that. And so some of that occurred back here where we bounced off the 5 when we looked at the volume. You can see that we had some volume back here when we broke 10. That's what I was looking at. Those above average spikes. And then there's some institutional support that came in on 5 before, but they're not really getting more now. That's a pretty decent amount of volume. So all of this stuff that was bought here, they're all going to have to sell and realize those losses if Tilray can't get back above $5. I would be really surprised if that happens, but it seems like they may be letting it. Maybe that was their one shot and they're willing to just let it go. Bit of a surprise. We ran back up to 5 and now that's solid resistance. So unless something like that happens again, where they step in and try to support it one more time, then you could see Tilray go into the pink sheets, and that means below $1. That's possible. It needs to get back above 5 really soon. Like I said, I used to know the exact time frame. I just don't remember. But it's not an extensive amount of time before the stock has to move back above or below that price. What's the symbol for Bumble? Oh, BMPL. That's a good guess, wasn't it? How about that? All right, so holding in there pretty well at 25. That's interesting. There's been chatter about these stocks in this space having some problem, but so far, not so much here. But it did come down and test 25 on the low today. I kind of think this, that's just, I shouldn't even say that because that's not technical analysis, that's fundamentals. At this point in time, I think you're in a holding pattern here. It feels like this wants to go lower based on the rest of the sector, but it is holding 25 now. But I can tell you, if it breaks 25, this is happening again. It's coming right back down, just like what happened in February. If it breaks 25, the same scenario happens. It goes to 20 in a heartbeat. So I would watch this level of 25 to see if it gets broken. For it to turn and become more bullish, if you're looking at for a bullish scenario here, you would need to see it break above 30. So it's got to get above 30. If it can get above 30, everything changes because now you reset that wave 4. You could go all the way up to a 61.8% wave 4 corrective move, but you just can't go long now. I mean, even as an aggressive move, that would just be throwing darts in the air. You need to see it to go long. You need to see it to go above 30. If it breaks below 25, you've got a great short. That's how I view Bumble. All right, so let's see if we can get a couple more in here real quick before we close things tonight. DIA, zigzag. Yeah, thanks, John. On the Aussie market, talking about an uptick in iron ore, which they heavily resource rich there. Yeah, when the new platform comes out, just hang in there, John. It's coming. That is so cool. All right, so looks like we got most of the questions here, and I wasn't able to have the facility to get to the YouTube questions. For those of you that are asking on YouTube, I apologize. A little bit of technical difficulties with the setup tonight, but please come back next week and we'll get you then. We'll try to lean towards the YouTube side of things next week. But hopefully you found that interesting. I think the market is going to tell us in the next day or two which of the two scenarios, option A or option B, plays out. Again, just in summary, we're due for a bounce. Do we go a little lower and then bounce, or do we bounce now and then go lower? That's it. There's no question that plays out. It's just which one comes first, in my mind. I think so. So thanks, everybody. As always, we've talked about this every time. This is our mantra. Time's the most valuable asset that each and every one of us has. We very much appreciate, totally sincere about that. when you devote some of your valuable time to us, and we do our best to make it an informative and educational use of your time when you spend it with us. So thanks so much. Have a great rest of your week. Look forward to talking.